Hey, everybody, welcome. Thank you very much for joining. My name is Matthew. Today, we are going to continue our look at Bitcoin miner revenue. Now we're going to look at the block reward on a trailing 12-month basis. All right. So, firstly, I do apologize for yesterday's audio on the video. Had to use the backup mic. Apparently, I was speaking into a dead mic yesterday. But in any event, we got the video out. And yesterday, we talked about fees. That is, fees that Bitcoin users, Bitcoin participants in the protocol, that they are willing to pay to miners. And we looked at it on a rolling 12-month basis to get their transactions accepted into blocks as part of the Bitcoin blockchain, as part of the Bitcoin network. That's one part of what miners make in the process of servicing the Bitcoin network with what they do, mining. That's one part of what they earn. The other part is right here. This is what we're going to talk about today. This is Bitcoin Issuance, otherwise known as the block reward. These are actual coins that are issued, minted by miners every day, every 10 minutes, that they service and continue to mine plugged into the Bitcoin network, including transactions into blocks. Yes, they get fees, which we talked about yesterday, but now we're going to look at what is the so-called block reward, or the issuance of actual Bitcoins that come into existence as part of every Bitcoin block. One quick note, notice how I call it Bitcoin issuance. I'm fine with block reward as well. This is just a little bit of lexicon, a little bit of terminology for those that remember, and I highly recommend still our first podcast with Dr. George Selgin, monetary economist and expert. As he pointed out then, and he was one of the first economists in the world to write about Bitcoin. Bitcoin is very different than any money system that we know. Even with gold, yes, chemically, physically, the amount of gold in the ground, in the Earth's crust, is fixed at this moment. The reserves of gold, the supply of gold, always increases every year. And for the last 200 years, that's been about 1.8% per year. It always increases. With fiat, with government money, we looked at the money supply recently in our money supply series. That definitely always increases. Gold, you can argue, is a little bit more, because of the scarcity of gold, because of the nature of the economy, mining, so on and so forth. You can argue it's more predictable than fiat, but theoretically, we could start mining asteroids. Maybe we'll find some mother lode of gold somewhere in the world. I think that's pretty unlikely, but if you do, then that would bring much more gold to market than would be expected, and that would impact price. Same with mining asteroids. So with gold or silver or any historical precious metal or base metal, copper or bronze alloys were used as well throughout the millennia. And certainly with fiat money, they are all unpredictable for sure as far as how much is minted or mined or printed every year. Base money for fiat and actual gold or silver ounces for the precious metals. It is unpredictable. Bitcoin is very different. Bitcoin is predictable, and because of that, I'm not going to use the word inflation. All right, inflation, that's the classical Austrian definition. It means money growth. It means the supply of money that comes into the economy. Of course, central banks today use the word to reflect an increase in a basket of goods of consumer prices, which is the basket that they themselves calculate. I'm not going to talk about the difference of those things there, but nonetheless, Bitcoin is very different. We know that there are 21 million Bitcoins per the protocol. We know that that will finish in or around the year 2140, 2141. And we know precisely right now today how many Bitcoins have been mined. It's about 19.3 million. If you were running your own node and you ran the command, you would be able to find exactly to the latest block how many Bitcoins have been mined. 19.3 million Bitcoins. And there is only going to be 21 million. So, what we're going to look at here, though, is we're going to look at the nature of the incentives for miners. And indeed, the block reward, the Bitcoin issuance that comes from the Bitcoin protocol every 10 minutes via the act of mining, via miners solving calculations, working with the adjusted difficulty, contributing to the Bitcoin network, to its security, as well as including transactions into blocks. This is the largest proportion of their revenue at the moment. So fees are one part, which we talked about yesterday. This is the other part. This is the actual Bitcoin issuance. Some say inflation. It's not the correct word to use because we know there's 21 million and that's that. But it is the actual issuance of Bitcoins that come into existence every 10 minutes. And to make it even more interesting and certainly much more helpful from a financial or economic level, as we did yesterday with fees, we're going to look at Bitcoin issuance, the block reward, over a trailing 12-month basis. Trailing 12 months. Again, it gives us a smoother picture of what actually happens. And as well, this is just how the economic world works. If you want to talk about crop yields, if you want to talk about yields in any commodity business, if you want to talk about revenue in any consumer or service business, you are most quickly and efficiently and just practically able to understand the value of the business. Firstly, if you can understand how much they make in revenue, gross and net, but revenue per year on an annual basis. So, in other words, this is a large portion, and indeed, for the moment, the largest portion of revenue, gross revenue, that miners make on a trailing 12-month basis. Now, one thing I perhaps didn't make so clear yesterday or didn't point out, this is gross. This is indeed a gross figure. It's a trailing 12-month, or to be precise, trailing 365-day figure. And, of course, this is not what they get to keep free and clear. Once they do the mining, they have expenses. Those expenses used to be smaller back in the day. You had electricity expenses always with regard to Bitcoin mining. But as the difficulty has rose, hash rate has rose, and the popularity of the Bitcoin network and the security of the Bitcoin network has risen all together, the act of mining certainly has become a, quote, expensive endeavor. And we're not showing those expenses here. We're only showing the gross revenue via what we call the block reward, or the actual amount of Bitcoins that come out of blocks every 10 minutes. And I have them here on the timeline. The Genesis block, Satoshi here, January 3rd, 2009, when he first bootstrapped Bitcoin with the Times article in the timestamp. 50 Bitcoins per block, blocks every 10 minutes. That was 7,200 Bitcoins per day. We had having one here in 2012, end of 2012. We dropped from 50 Bitcoins per block to 25 per block, 3,600 per day. Having two here mid 2016, July 2016, we dropped to 12.5 Bitcoins per block, 1,800 per day. And then the last halving that we have seen, having three, we dropped to 6.25 Bitcoins per block, or 900 Bitcoins per day. And as of at least the latest that I've seen on my block clock here, which is showing nothing at the moment. Thanks, Rodolfo. Now I need to change the feed from that. I believe it's going to be April of 2024 is the projected next halving, where we will drop again to 3.125 Bitcoins per block, or 450 approximately Bitcoins per day. And you can see, again, this is native Bitcoin, the right axis, no millions, billions. Of course, it's just straight up Bitcoin. So let's just look here in the recent years since the last halving. 330,000 Bitcoins per year come into miners' coffers. Now, I'm showing you everything on a daily basis on a rolling 365-day basis. So let's let's just very simply, that's actually from the last halving, zoom in here. What does this mean? Again, just like we talked about yesterday with fees. January 3rd, 2022, 329,347 Bitcoins on a trailing 12-month run rate or 365-day run rate. If you go to January 4th, 329,185 Bitcoins. So does this chart say that miners made 329,347 on January 3rd and then another 329,141 the next day? Of course not. Sorry, that's the 5th. It moves a little bit, the tooltip. You get the idea. Of course not. This is simply taking the prior 365 days every day and rolling that in, calculating that. And so you can see because of that, we get this sort of smooth drop from each halving that takes a year. So here we were at 677 roughly 1,000 Bitcoins per year pre the last halving, the third halving, when we went down to 6.25 Bitcoins per block. And now we're at 330,000 Bitcoins per year. And if it even seems kind of smooth here, it's not. Of course, this is a live network. Let's zoom in. This is how it looks even zoomed in over the last year and a half. So we're as low over the last year and a half as 323,000 Bitcoins on a trailing 12-month basis, as high as 337,000. See how it goes. This depends on the market, the difficulty adjustment, the mining capacity, hash rate at the time, many, many factors. But these are Bitcoins. Make no mistake, these are Bitcoins that are coming into the network. One more thing I think is interesting to point out. People don't talk about this a lot, but if you look in the first 2-3 years here, you can see that it's not such a smooth endeavor for Bitcoin here. You see here, the halvings make a lot of sense. It takes 1 year to go down, and then you have 3 years of sort of stable trailing 12-month production of Bitcoins. But basically from the first halving, from the Genesis block to the first halving, that wasn't exactly the case. And there was definitely some tweaking here. And remember, Bitcoin was very centralized at this point. From January 3rd, it was extremely centralized. It was just Satoshi that knew anything about this project, roughly. Hal Finney as well, receiving the first Bitcoin transaction. January 3rd, 2009. All right, this is a trailing 12-month basis. Okay, so from January 3rd, 2009 to January 2nd, 2010, that's a full 365-day period. Miners produced 1.6 million Bitcoins per year. How much should they have produced based on 50 Bitcoins per block, 7,200 per day? They should have produced double. Should have been 2.6 million Bitcoin per year. So there was some tweaking going on. I do encourage you to listen to our interview with Uri, a very early Bitcoin miner. Talked a little bit about this. But basically there was some tweaking going on. Bitcoin was sort of, the blocks were not producing at a normal rate here. We're 1 million behind the schedule. And here we were about 800,000, so 3.4 million over the next year. See, January 2nd, 2011, the very, very next year. So January 2nd, 2010, 1.6 million were produced. And in the trailing 12 months, ending January 2nd, 2011, 1 year later, 3.4 million. So we're 800,000 more here. So Satoshi and the other miners, they kind of caught up to the rough rate that it should have been. There should have been 5.2 million Bitcoin produced at this point, and there were 5 million at this point. And then went down a little bit here, and then this is really about the actual run rate that it should have been during the first cycle, from the Genesis block to the first halving, about 2.6 million Bitcoins per year. It was roughly working that way right here. So, first working digital decentralized money ever. Definitely there are kinks. Definitely it was centralized at this point, but things were being worked out right here. And then from the first halving, you can see that things are pretty much on track. And again, trailing 12 months. So this is just to show you a rate. It's to show you if you see any point on this line, you can look back 365 days. That is how much Bitcoins came into existence, i.e., that is how much gross revenue in block reward, in new Bitcoins that miners earned, were incentivized to earn to contribute and secure the network. So what would that mean here if we're at the start of 2023? Well, you start here, and then you go a year later, as we looked at. So 1.6 plus 3.4, you're at 5 million Bitcoins. You do this 11 more times, 13 total snapshots. All right, you just go out a year, all the way to here, January 3rd, 2023. That would equal the total Bitcoins that have been mined thus far, about 19.3 million Bitcoins. So that's how it works. That's how Bitcoins come into existence. And this is the incentive, the main incentive that miners have to mine Bitcoin. To invest into infrastructure, to invest into mining equipment, to find the cheapest electricity, the most efficient electricity, and to mine and secure the Bitcoin network. And again, it is not the only source of revenue. They also have mining fees, and we'll put those together soon. But this is just the block reward or Bitcoin issuance that comes, is produced by the network every 10 minutes. And this is in native terms. This is how it looks in Bitcoins. A few million Bitcoin each year at the beginning, to where now we're at a run rate of 335,000 Bitcoins per year. So now that we've looked at native Bitcoins, let's go ahead and look on the left axis, just like we did yesterday, at Bitcoin issuance in US dollar terms. And I do have Bitcoin P today on the chart here, May 22nd, 2010, our friend Laszlo. And this is when I start my price history of the Bitcoin network. The history is, of course, there is even more derived prices of how much a Bitcoin could be worth. It's pretty interesting to look at. You can see some of these things online, some of these estimates online, thousands of Bitcoin for under $1 at this time, based on electricity spend. But I start my price history in US dollars, which again, it's important to look not just in native Bitcoins, which will always be important for the Bitcoin network. That's the only thing that the Bitcoin network understands and recognizes, the protocol. But as the dollar is the world's reserve currency, still it's the dominant fiat currency in the world. We can easily use the powerful tool of the exchange rate to show us how much this is in dollar terms. And as I'm doing this on a trailing 12-month basis, you're only going to start to see this starting May 21st, 2011, 1 full year after Bitcoin Pizza Day. So now I'm going to put on the left axis Bitcoin issuance in US dollar terms. There we go. And the axis is in million. All right, and most of the time it says 1,000 million, and if you see 1,000 million, that's $1 billion. And again, 365-day trailing run rate, trailing 12-month basis. That's what TTM means. This is the best way in finance and economics to compare industries, to compare yields when you're talking about how much you can produce or sell of something in a particular time period. You look at it on an annual basis. So let's zoom in here at the very beginning. It's kind of interesting just to see trailing 12 months. Remember, millions, 5 million in the first 2 years together. All right. 1.6 million the first year, which we talked about, is a little bit under the run rate. 3.4 million the second year is a little bit over the run rate. You get back to the 2.6 over here. But, 2.6 million Bitcoin per year is the run rate during the first cycle, before the first halving of Bitcoin. In dollar terms, once we even have a price, which only starts, by my calculations, Bitcoin Pizza Day, May 22nd, 2010. So if we look to May 21st, 2011, there you go, $2.5 million. $2.5 million. For 3.4 million Bitcoins over the prior 12 months, miners earned if they sold every day that they mined collectively as a network. That would be $2.7 million. $2.5 million. Sorry, my tooltip keeps sliding on me here. I got to leave it more static. You get the point. And then it rises up here with the Bitcoin price. We come to a local top, 23 million bucks by the next year. By 2 years after Bitcoin Pizza Day, 23 million bucks, or 2.8 million Bitcoin. Think about that, 2.8 million on a trailing 12-month basis that miners earned for securing and producing Bitcoins and including transactions into blocks. Although, again, transaction fees are separate. We talked about that yesterday. So we set the zoom. We catch the cycles here. Again, you're going to be, for the most dollars after the cycle, you're going to be a little bit, it might even be 12 months after, and that's kind of the case here. Remember, the cycle topped in November 2013 here at $1,200 per Bitcoin. And here on a trailing 12-month basis, the Bitcoin issuance, we have $880 million worth of Bitcoin that was produced on an annualized basis, or 1.5 million Bitcoin. Come November 2014, down again, crypto winter, up again. SegWit is activated here in the summer of 2017. We have some forks, but basically the block wars for Bitcoin are over at this point. Miners are shown to not be in control of the network. We have UASF here that helped get SegWit through. And actually here, you do see, interestingly, there was a major drop in price here. So you do see that affect the trailing 12-month run rate almost immediately. Because in November 2018, we had a big drop from like $5,000, $6,000 Bitcoin down to $3,000. You see that kind of caught here and then down, up again a little bit here into the third halving. We went down to 6.25 Bitcoins per block. And then, of course, the big run up in price when we get to $60,000 Bitcoin twice in the year 2021. Meme stocks, people trading at home, Robinhood, COVID stimulus, synthetic trading of Bitcoin. You see the trailing 12-month, let's zoom in here, the trailing 12-month revenue for miners. At the top, it was January of 2022. So basically counting the full year behind that, all right, 2021, the big year of price, $15.8 billion, $15,850 million in Bitcoin issuance in dollar terms. Yet in Bitcoins, much lower than numbers we've seen. Remember, the first 2 years of Bitcoin, 5 million Bitcoins were produced. Here, over the last year, in the year 2021, basically, only 330,000 Bitcoins were produced, brought into existence because of the protocol. Yet that is worth way more in dollar terms, $15.85 billion. So here's where, looking at things in both native Bitcoin terms and in exchange rate US dollar terms will give you an interesting picture. All right, we're in billions here, and only 300,000 Bitcoins, 330,000 Bitcoins, where we're in millions of Bitcoin here, and 15 million, 1,000 times less, 15 million here. That's 1,000. Remember, 1,000 million is a billion, so 1,000 times less here in 2011 as far as the US dollar trailing 12-month run rate of revenue. So this is why looking at things on an annual basis, looking at things both in native Bitcoin terms and dollar terms really, really helps. And it shows you what it has to offer as far as US dollar inflationary protection, but also just how it works, how miners react to other miners coming on board, how they react to the halving, how it works, and the incentives of the network, the way that Bitcoin has been set up by Satoshi remarkably is showing to be working. And now, as we did yesterday, we're going to look at a trend line on the dollar portion only to see where in the cycle we are, where in that pendulum swing we are. So let's take off the issuance now. Let's take off the native Bitcoin, no longer the right axis. Just looking at dollar terms. Okay, this is just easier at this point, and we can draw a regression, a power regression trend line, see prior videos for that. This one is even higher R squared than yesterday when we looked at fees. This one, 93% R squared. And for this, I'm just going to go straight to log scale. Actually, I need to put all these back on. Apologies at the moment. That's how my software is working. Put it on log scale. Now I'm going to take them off again. We're just looking at the regression trend line and the Bitcoin issuance here. This is the trend line over a trailing 12-month basis. Again, what does the 93% R squared mean? It means that the green data moves around the line. It moves around the trend line 93% better, or with 93% less variance than the green line would move around the average. And if you're at 100% R squared, the data would basically lay on top of the trend line. So 93% is an extremely solid goodness of fit. It's an extremely well-behaved set of data, even though it can have wild swings above or below the trend line. Back to what we talked about yesterday with the pendulum swinging. You can absolutely have that and have a solid R squared. All right, so let's go back to the beginning here. 1 year after Bitcoin Pizza Day, 1 full year of having dollar-based data where we can get a dollar expectation of revenue, and not even expectation. This is fact. This is the beauty of the Bitcoin network. This is, it's academic, yes. I don't know, of course, not all miners sold their Bitcoin immediately for dollars that day after mining. Of course, this is an academic calculation, but it is factual in terms of how the price moves and rolls over a 365-day period. So 15 million bucks here. The trend line was only 9. So a little bit above 15, 16 million bucks here, trailing 12-month basis that miners would earn from mining Bitcoin, specifically and only from the issuance. The trend line was about 9, actual 15. All right. We go into 2012, we're well under it. The trend line now, 35, 40, 50 million dollars here at the end of 2012, start of 2013. Actual trailing 12-month mining revenue, only 20 million. Okay, then we get into the first boom and the end of the first boom here at 2013. The trailing 12-month revenue is gonna be high still for that, and part of 2014, of course, because again, it's just rolling trailing 12 months. 760, 770, even more, of course. We get up to 900 almost. $880 million trailing 12-month mining revenue from Bitcoin issuance. The trend line, 286 million. All right, so we're starting to get well above now. The pendulum is definitely swinging. And this is log scale, so pay attention to the tooltip. Crypto winter, we go under again. The trend line is now growing here to where we get to close to, the ICO boom, all the other crypto and many scam coins boom here. 2017, the trend line is 1.4 billion, 1.5 billion in 2017. Actual Bitcoin trailing 12-month issuance in dollar terms at this moment, not even half that. 700 million coming out of the crypto winter on a trailing 12-month basis, rolling. SegWit activated. Block size war has basically ended. The price topped here at 20,000 at the end of 2017, but again, trailing 12 months, the pendulum's going to swing again continually, where the trend line now at 93% R squared trend line is 3 billion, but actual trailing 12 months, 6 billion. So well over it, then under it again here, a little mini kind of crypto winter. And then before COVID, we're back above it again. Let's look at the COVID years, the high meme stock trading years. $60,000 Bitcoin time period. The top at a trailing 12-month basis, again, 15.8, getting close to $16 billion. $16 billion over 1 year. The value of Bitcoins coming out every single day based on that price of every day over a 365-day period. That is 330,000 Bitcoins or so. $10.8 billion is the regression trend line. So we're not double. We're not double here as we were in the past, as you saw, even more than double. We're only about 50% more, 50, 60% more. And then down we go. Down we go after the scams that came out in 2022. We talked about the same phenomenon we saw generally happen with fees, although slightly different with fees. Remember those desert buttes that it looked like? Just two huge bumps here in 2018 and in 2021, 2022 with fees. Not like that with issuance. Issuance, this is the major part of mining revenue. Remember, the fees, the max was about $1.1 billion here. So we're 15x that, 16x that, 16 billion here with issuance. So issuance always so far has been the major contributor to mining revenue per block, per day, per year. But let's look now where we are now and how far down we really are. For that, we can draw, very simply, percentile bands. So let's go one down, one up. Remember here, what's inside the blue lines? What's that represent when we have a 1 sigma distribution around the trend line? 67% of the time, 2/3 of the time, the data is going to fall within these bands. And these bands can be huge. So let's look at 2018 just as an example. We're outside of 1 sigma here. All right, so actual issuance, trailing 12 months, $5.7 billion. Trend line, $2.6 billion. 1 sigma up, which would have been outside 2/3 of the time, $4.8 billion. So we're outside of, we're pretty rare. We're outside of, we're in 1/3 territory of percent of time. We're outside of 2/3 of the percent of time here in 2018, okay, based on the all-time trend line. Where are we today? Well, if you remember, I'm not even going to talk about 2 sigma yet, because if you remember, the fees were outside of 2 sigma yesterday in our video. Here, they're just outside of 1 sigma. So we're actually much less rare as far as the dollar issuance of Bitcoin goes for miners, miner revenue in terms of issuance. In dollar terms, the air here is actually, it's certainly rare. We're getting to 1 sigma moves now. We're at a 1 sigma move at the very moment. All right, let's even zoom in a little bit more. We just passed that mid-February, where we're just outside the 1 sigma down line. So now what you see has, based on the trend line, of course, this is all based on the trend line and how the data moves around the trend line, which is a strong trend line, 93% R squared. We are in 1 sigma down territory, or outside events that typically happen 2/3 of the time. Yet, not as rare as what happened with the fees. And check the video yesterday for that. Sorry for the audio. All right. So 2 sigma down, let's just see what happens there. 2 sigma up, what's that represent? Anything that is inside of these bands happens 95% of the time. 95% of the time. Anything outside is 5% of the time. Or more specifically, if it's above the red, it's 2.5%. If it's below the bottom red, it's also 2.5%. That's how it works with these percentiles. So pretty rare. The only time you really got outside here based on issuance was in 2014. Very quickly, catching the end of the 2013 boom as we're trailing 12 months, and a little bit in 2013 here on the downside. Okay, but this is actually a much more even distribution than we saw with fees. Issuance, the most predictable part of a Bitcoin miner's day, generally, is that we know that roughly every 10 minutes, based on the prior difficulty adjustment and the hash rate at the time and the mining activity at the time, you're going to have a chance at 6.25 Bitcoins per block. So where fees and the amount of transactions could be more variable, this is more solid, more reliable, more predictable. And so we see that we're actually not as close, not as rare air here with issuance as it was with fees. We're definitely on the downside. We're trending down still on a trailing 12-month basis. But again, this is smooth. And this is also slightly of a delayed metric as far as what price could do at any moment, right? We're trending down, but we're not nearly as low as we were with fees. We're not actually even close to a 2 sigma down move. We're just at a 1 sigma down move. So just coming out of 2/3 of the time of observations. So there you have it. That is the Bitcoin issuance in dollar terms with a power regression trend line of 93% R squared. Looking at the percentiles, looking at the sigma standard deviations around the trend line, showing you exactly where the data has been, where it fits in, and where we are today. Yes, as with fees, we're low. but not as low as the 2 sigma down move, beyond 2 sigma down move with the fee. Trailing 12-month fee revenue for miners. You can just put on the right axis again. This is how it looks in Bitcoin terms. And it's a remarkable thing. When you look at this, when you put it together this way, when you see how the whole market around the globe operates to secure, produce Bitcoins every 10 minutes, and also find the most efficient forms of electricity to do so, it's a quite remarkable system that Satoshi has created. So here it is, trailing 12-month Bitcoin issuance, or the block reward that miners earn approximately every 10 minutes per mining Bitcoin. Thanks for watching. Take care.